right, what is up, guys? My name is Liquidity. Um, I'm a index trader. I trade US 30 and NAS 100, also known as YM and NQ. I have been trading for 5 to 6 years. I've done six figures in profit payouts. I am self-taught. I trade mainly liquidity. I do use some support and demand to my advantage. However, I am not a retail trader. I trade against retail and I trade against the majority. And today I'm going to be going over how I caught US 30 shorts. I'm going to be going over my strategy and exactly what I used to basically react to the PA and take advantage of shorts for profit. So let's get straight into it. I upload most of my trade recordings to X, to my X. My X username is right there. It's basically the same thing as my YouTube username. And my Instagram should be in the link as well. It's the same username except with one I at the end. Uh, yeah, let's get straight into it. All right. So I've been trying to post more online because a lot of people have been telling me that my trade recaps are helping them open their eyes to the market. The market does move against you guys. It's not your friend. The only thing that's your friend is a trend. And when you know how to take advantage of it, you can profit, but not a lot of people do. So hopefully this one video can open your eyes to exactly how profitable traders trade and can give you guys some gems that you can use in your trading in the future. All right, so let's get straight into it. Get out of this. All right, let's go full screen. We're going to talk about exactly how I caught the buys to the sells and will help me determine my trade bias. Let's go, guys. All right. So the market overall is bearish, right? We've been selling off for the past couple of days. Trend is your friend. You gotta look for more sells and buys. Yeah, you can buy, but overall we are in a bearish market. So before the day started, I had some major buy side and sell side marked out. My major sell side was at 42,300, and major buy side on YM was at roughly 42,600, right? So 9:30 came in and price automatically pushed up. Again, we are not going to be going through all of the time frames because again, time frames are just a representation of what price is doing at that specific time. You want to understand exactly why price is behaving the way it's behaving and where the majority of the liquidity is because that's all the market really does. It's not like it's going to move according to its value because that was the case, markets would just be trending, you know. There's a lot of choppiness in the market because the market is out to get everyone, you know. If it really was that easy, then there'd be millionaires spawned in every single day, but you know, the market's manipulated to make people lose. So people like me understand that and we um we really understand that this trading game, this day trading game because we're talking about day trading. It's kind of like a gamble, and once you really acknowledge that it's kind of like a gamble, that's when you can stop being hard on yourself that you're not catching every move. Because when you're hard on yourself for not catching every move that you think you should catch, that leads to more frustration and more losses. You know, you gotta really sit down with yourself and understand that you're not supposed to catch every single move. This market's manipulated to make people lose. It's very random, you know. Anything that's not 100% guaranteed in life is a gamble. Keep that in mind. Anything that is not 100% guaranteed is a gamble. So don't be hard on yourself and just take a lot of notes from this recap, you know. Trade on multiple accounts are all copied, so you might see $157 here, but the bigger picture, it's a larger amount. So let's get back to the trade recap. So basically, 9:30 came, we had a huge push up, and it was quickly mitigated with a push back down. Then we start going back up. So we are holding demand right now, right? So we are overall bearish, but we had a huge push up, got mitigated, went back up. So demand is holding right now, right? We still have this. I'm anticipating this huge buy side liquidity right here. So I'm anticipating it being taken at some point in the day. I don't know when it's going to be taken, but according to my strategy, I see demand is holding. So I'm going to trade it in the direction of demand. It's that simple, right? So the day started, I entered 5 micros at 42,500, and I'm going to talk about why I entered 5 micros right now, right? So right here. All right. So let's talk about this price action right here. Please, please listen very closely. You could take away a lot of information from what I'm about to say. Um, we had price push up 9:30, create huge imbalance, come back down, fill that imbalance, tap the demand zone, as people like to say it, or support and resistance zone right here. And price just quickly moved back up and created a visible demand zone again right here, internal demand. How do we know it's demand? Well, it's we could tell just by the structure on the seconds time frame. We would have a leg here and then a leg here and then another push up. So it's a valid demand zone, right? It's basically the short-term sell that created the buy. So we keep that in mind, and we are overall bearish. However, we have huge buy side liquidity marked out from London that is still open. And on top of that, we also got London, not London. We got London and Asia highs open. So huge amounts of buy side liquidity are still open for grabs, right? We keep that in mind. So 9:30 push came in. We are bullish. We are holding demand zones. So cool. It's very simple. I'm just looking to tag along, take the elevator ride up with all the big buyers. Not aiming for too much, aiming for roughly 85 points, 86 points. And that's going to be at that right before that level, right before that buy side liquidity level, right? So I enter 5 micros right here, right? We have demand, this demand zone right here, or support and resist, whatever you want to call it, right? I just identify it as basic structure, right? This is what my eye has been trained to see. I see, we have this consolidation buys and sells, and then we have a short-term sell that created the push up. So it's going to be a huge zone of rejection, right? Once I see it start rejecting, I'm in. This is going to be a roughly 1 to 1.4 or 1 to 1.3, somewhere around there. I'm comfortable with that. Risking $157 across multiple accounts to make 215 on a very, very, very probable trade. I'm fine with that. Cool. So when price starts going my way, right, this is what I do. I start taking advantage, right? I automatically add 10 micros, right? No, not add 10 micros. I add 5 to have 10 micros, right? Now, why did I add 5? I'm taking advantage of my winners. As soon as I see it rejecting that zone and I see all this liquidity above, I'm adding 10. I'm adding 5, right? I have 10 now. However, I am reducing my risk because I'm going break even almost immediately. Because again, if price, now look, I want to show you guys something. Now, I'm adding 5 more here because if price were to come back down and if come back down here, I don't want to be in the position anymore because we had this buy to sell that closed off previous liquidity as a strong rejection zone, right? This is a strong rejection zone. I'm anticipating for it to be broken, right? However, If it's not going to be broken, it's going to dump back down. I'm anticipating for it to be broken immediately, right? We already rejected the demand zone right here. So I'm expecting price to just go and sweep that buy side liquidity because it's a very huge it's a very huge zone of sellers in there, right? Early London sellers and early Asian sellers, right? So I go break even almost immediately, right? I'm not trying to risk it. I have 10 micros. It's early in the day. Market just opened a couple minutes ago. It's cool, right? Usually these trades go my way. So what happened? Price starts going my way. We eventually break this strong zone of rejection, right? So I'm anticipating another pullback. I'm cool with another pullback. However, I'm not gonna risk it just yet, right? If we do have another pullback, I am anticipating like the 70% of the whole move's internal sell side to be swept, which is this candle, right? Hopefully I can get a better position and risk less of my money for more profit. That's how you take advantage of trades, right? So boom. We're break even right away. We're almost at TP. But what does price do? It starts going my way, but it takes me out. Almost as soon as it takes me out, right? I re-enter again, right? As soon as it takes me out, I re-enter again. And that is right here. So boom. That sell side, internal sell side on the 1 minute has been taken out. Now I can enter at a better position, which is right here. However, this did happen a little quick for me to take advantage of it, but I just stick to this routine because in the long run it is very beneficial for me. Um, so I would enter right here, right? Buys, and I would put my stop loss right here because this is the next demand zone, right? We're creating bullish structure. We have higher high, higher low, then another higher high. This would be the leg. I don't want this to be broken. Overall, I don't want this to be broken, right? This is the main demand zone. However, it's a 1 minute. I just don't want this to be broken. I'm not risking too much. So I re-enter with five, right? Stop loss here, 115, same take profit. And as soon as it starts going my way, I'm adding five more again because this shouldn't chop around anymore. This should go straight and flush that those buy side liquidity, right? So boom, starts rejecting. Once I see it's rejecting, I add 10. Same TP. Now, if I could have reacted a bit sooner, I could have entered at a better price. I would have had a bigger TP and a smaller SL to work with. That's how you take advantage of these profits. That's how you take advantage of trades that should still hit or have a good understanding of and good anticipation of. So we're in with 11 now because I see heavy rejection. I add one more just for the fun of it. Now, we had this huge bearish candle, right? Close on the 1 minute, 2 minute, maybe 3 minute as well, right? Swept this high right here. It swept all this liquidity right here. So we are now inducing sellers into the market, right? I understand that the big buy side liquidity isn't just going to be on the 2 minute, 3 minute, 5 minutes. It's going to be on like 15 or 30 minute or 1 hour. And that's why I have 42,600 marked out. I'm looking for this to get swept first, not for the lower time frame ones. This is all to induce traders in the other direction, right? So we are now getting a bunch of sellers coming in. We are playing around in these levels. We have a bunch of lows that need to be broken. We got bear people just starting to sell. And it's chopping around for a bit just to make you think that it's gonna sell, right? So chopped around, swept everyone out, and they came back down. People are still thinking it's gonna sell. I'm in buys. It's starting to create bearish structure on the 1 minute. Looks like it's about to just flush. What does it do? It starts breaking 1 minute structure, 1 minute highs, and just automatically just buys up doesn't give anyone the chance to come out. When there's an influx of sellers in the market and price looks like it should sell off, most of the time they're just gonna, you know, just sweep everyone out as soon as possible. They're not gonna give anyone the chance to really exit the market or exit their positions, right? So PA is going our way. I forget to even go break even. I would have went break even before this, but at this point I'm like so confident it's gonna hit my TP that I'm like, you know what? It's whatever. So far we are gonna make $444. We are up 356. Our TP is right before that buy side, right? What happens? Plays around for a bit and it sweeps it, right? So boom, we secured $444 across multiple accounts. Nice. Now, the overall trend is bearish, right? And we had a bullish push at market open. So I'm anticipating sells in the future, right? But I'm not just gonna foolishly sell anywhere. I'm gonna wait for my zones to get taken, my huge buy side liquidity zones to get taken. I want them to flush out all the sellers and have buyers thinking this is gonna go back up, right? It's only Monday. It's not gonna go. I don't think it's gonna go up on a Monday. You know what I mean? We don't have the big moves come in on Mondays. Why? Well, think of it like this. When an hourly candle opens, right? You don't have the majority of the volume in the first few minutes. You have the majority of the volume in the last couple of minutes, right? Not all the time, but most of the time. The same thing applies to the weekly candle. You have the majority of the volume coming towards the end of the week, right? So that also applies to the daily candle. You know, we have majority of the volume in New York, right? You have London, and you have New York session, right? Majority of the volume comes in New York, not Asia, not London. And that's why Asia is so slow. Now, pair this up with the week, right? Monday, Wednesday, Friday. Majority of the volume comes towards Friday, not Monday, right? Because we are looking at the weekly candle, we're thinking bigger, right? You want to think big and small for your trades, right? Take advantage of both sides. So we have that buy side liquidity sweep, and what happens? You get a huge rejection on the 1 minute, right? Huge rejection. So this is not enough for me to enter a sell. I want to look for a continuation of these sells and then a pullback that's going to confuse buyers and sellers first before going back down to where I wanted to go down to, right? To that lower sell side liquidity that I had marked out earlier. So what does price do? Look at that 3 minute huge rejection candle. Swept all that liquidity right here, all that buy side. Huge drop, right? This is like 100 point drop in a few minutes, right? So boom, we're sweeping sell side liquidity now. As of right now, we're getting a bunch of sellers, right? People are probably just selling because this is going quick. They're probably just like spamming sell, 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 trying to take advantage of the sell before it just melts, right? We, as liquidity traders, we wait, right? We always know there's going to be manipulation. We wait for the manipulation, right? What happens? So price starts chopping around, starts confusing people, starts looking bullish again. People are probably starting to buy again. What we do is when that PA on the 1 minute forms, we start looking for obvious buy side liquidity to be swept. And after that, we look for a little rejection and then we take a risk on that. We work with probabilities, right? We try to find the best possible risk to reward trade and take advantage of it, right? That's how you profit off these proffers. So we are looking for some liquidity to be swept before entering sells. We are now bearish on the market. I am anticipating sells. I'm reacting to sells, right? Boom. So we identify a nice zone of liquidity right here, right? So we're as liquidity traders, we are going to be very patient. We're going to wait for that to be swept before doing anything, right? We're not going to rush a trade. We're just going to sit on our hands and wait for that liquidity to come. Why? I'm gonna show you. So price starts selling, starts breaking lows, right? So now we have a bunch of sellers coming into the market. Comes back up, doesn't break that zone, but starts dumping again, right? Now we got even more sellers, right? Because it's broke this low. Price comes back up, starts chopping, then creates bearish 1 minute structure, right? This looks like it should just dump, right? This is creating lower highs, lower lows, lower highs, lower lows. There's probably a lot of sellers, right? What do? We are still waiting. We are not budging, right? And on the lower time frames, there's a little imbalance right there. So keep that in mind. It's a huge liquidity pool. So price is going. And right now, people are probably just adding sales, thinking, you know what, this is probably gonna dump. Like, I don't want to miss out. People are FOMOing. You know, not us. We're waiting, right? We're not gonna let the market BS us. And if we don't get our entry, that's fine. We already made some profit. And even if we didn't make any profit, in the long run, it's more beneficial for us to wait. You know what I mean? So don't think short term, think long term. So right here, price starts breaking. However, right at the low of all this sell side, what does it do? Starts buying back up, right? Now people are starting to buy again, right? People are just buying, buying. They're seeing it come back down into this little gap and then buy again. People are adding buys. That's it. They're not bearish anymore, right? We are still waiting on um our initial bias, right? People are probably buying whatever the case is. We are just waiting for that liquidity to be swept because we understand as liquidity traders that price moves off of liquidity, buy side and sell side. So if there's obvious buy side liquidity open, it's very beneficial to just wait for it, right? That's what we're doing. And a lot of people who are, just rushing trades are probably just spamming sells at first, and now they see this buy up, they're probably buying now, right? They're probably buying. They have this huge rejection off this uh imbalance right here. They think that it's forming their strategy or their setup, so they're starting to buy. We are just waiting for this liquidity to be swept, and then we're entering sells, right? Because overall, as you guys can see from previous structure, the trend is bearish. The trend is your friend. Do not go against the trend because in the long run, the trend will help you, right? Don't try to be a superhero and try to catch every reversal. That's what messes me up a lot, right? The trend is always going to be your friend and learn how to accept it, right? So, boom, price is starting to look like it's going to sell again. Now we got people trying to sell. This is me just talking about the average retail, right? Because this is what the market makers target, the average retail, it's the majority, right? Boom, we start selling. So now we got a bunch of more sellers. It's looking like structure is looking like it should hold sells. What does it do? Right back up, right? So we get more buyers again. And right here, once that is swept, I already have all my confirmations, right? I'm in sells, 3 micros, light. I'm waiting to see more of a rejection before I add. I'm risking $79 across multiple accounts. I'm fine with that, right? We have a huge TP, right? We already made $444. Cool. Let's see where this takes us. We start seeing a rejection, right? As soon as I start seeing a rejection on the lower time frames, I'm adding 3 more. I'm taking the risk, right? I'm risking roughly 40% of what I made on the previous trade, which I'm fine with to make almost the same profit I made in the last trade. I'm cool with that, right? I'm taking advantage. And yeah, so once this starts really going my way, I add 6 and boom, price starts flushing, right? Once I see this sweep of buy side, internal buy side, that creates a nice profitable push down. I'm feeling more confident, right? So price is going my way, price is going my way. We swept all that internal liquidity. It looks very, very good, right? So I'm holding. Then price starts sweeping internal sell side. And this sell side is the demand zones that held these buys, right? So once these start getting swept, the first one gets swept, comes all the way back up. Now the second one's about to get swept. We are starting to look bearish. We start on the lower time frames, like 1 minute and like 30 second. We have lower low, lower high, and this is about to be another lower low confirmation, extra confirmation. We eventually get it. Boom, we broke. So we have another demand zone right here, this 1 minute candle. We're keeping that in mind, right? However, we still have the sell side liquidity in mind as well. Like this needs to be swept. This did not sweep the Asia highs. We're keeping that in mind. We don't want to be too risky, right? So price is going down. Once we tap into that 1 minute demand, price starts rejecting, right? So let me backtrack to that. Price starts rejecting right here. So the 1 minute candle before this rejection, before this bullish candle, the 1 minute candle right before it, it took out the highs of the candle before it and then created a low. So that should be a strong rejection candle. However, it closed bullish and the new candle closed above the high. We are getting on the 5 second and 10 second. I'm not looking at the 5 second, 10 second chart, but this is what I know from my experience. I know on the 10 second, 15 second, whatever the case is, we're creating, you know, higher highs and higher lows, right? This is starting to look bullish, right? Just on the lower time frames, on the seconds time frame. Me knowing this, I already made $444, right? I'm up $360 on this trade on multiple accounts. Do I really want to risk this going back up? Because at the end of the day, no one really knows what the market's going to do, right? It's kind of a gamble at the end of the day. Anything that you can't predict 100% is a gamble. It's that simple. I've made six figures in prop payouts, right? Now, I've made those payouts because I fully acknowledge that this is basically gambling, right? I'm not beating myself up when price doesn't go my way, right? I'm not frustrating myself and causing myself to fall more, add more losers, right? Because that's what gets people. It's all an emotional, psychological game. Um, Once you see that you're not catching the trades because you believe it's not gambling, you not catching the trades makes you frustrated, makes you think that all the work that you're putting in is going to waste, and that creates a portal for demons such as greed and pride and ego to come in and try to make you make mistakes in the market again. You start being greedy, you start telling yourself, no, I could catch this trade. Then you start slamming more sells or more buys. Then boom, you get messed up, and then your pride comes in. The demon of pride comes in, and he's telling you, you know what? These losses don't matter because you can make it back. You got this. You put in the work. You put in hours and hours and hours, and you got this. Then boom, you go in the same exact trade uh, that made you lose just 5 minutes ago, and you lose again. And then boom, it's just an endless cycle. So it's all about being grateful, bro. Grateful, being grateful is a way to combat these demons, right? So it's very hard being grateful. It's very, very hard being grateful in trading, and that's why only 1% of people make it, right? So I'm gonna be grateful. I see 361 across multiple accounts. I'm not gonna push it. I'm expecting way, way lower prices, right? But if I'm expecting way, way lower prices, then catching moves like this, catching 100 point move, 120 point move like this, and like an 80 point move before makes it even more probable in my case. And 100 points being that probable is a big advantage in the long run because I can make a lot of money when I compound. So I'm keeping that in mind. I'm seeing price might be able to start reversing. I don't want to risk it. I'm done. I'm out. I make good profit. I pull my money. Boom. We catch at the end of the day roughly 190 points on YM, and we finished within like an hour or an hour and a half of trading, right? No L's, straight wins, one break even in the beginning, and we started off our week very, very strong with bare risk,